Okay, so good morning, and it's good to be back to the markets and the regular weekly sessions. So as usual, we're just going to start off by looking at the economic calendar to see what's coming up. So I'll just bring the economic calendar up. So today is Tuesday, the 29th of June. It's almost the end of the month. And again, make sure you're using the correct time zone. I'm currently in Rwanda, so I'm using GMT +2. So all the times I'll be quoting our GMT +2 times. So let's see what's coming up today. The two markets we're looking at are the Euro-US dollar and the dollar Canadian dollar. So those are the two main markets we're looking at, Euro-USD and USDCAD. So we're going to see what reports are due out today that could affect those currency pairs. So let's have a look. Of course, we can just ignore reports of low importance. We can also ignore reports from France and Denmark because unfortunately they don't impact the market, France or Denmark. At 8 o'clock from the UK, it's always good to note reports of medium importance because it could potentially affect the market. And usually anything to do with the housing market could potentially affect the market, but that's why they are classed as a medium. Obviously, the reports of high importance you cannot ignore, and you want to avoid trading prior to reports of high importance. But reports of medium importance, it's important to note them. And if you think they could potentially affect the market, then you want to be cautious trading prior to that report. So obviously UK being the financial capital of the world, and like I said, anything to do with the housing market could potentially affect the markets. So you need to note that at 8 a.m. this morning, Rwandan time, GMT +2, that the nationwide housing prices report is due out from the UK. That won't stop us trading, but we'll need to note or check your potential trades around that time. Again, we can ignore France, Hungary, Spain, and reports of low importance. We could just ignore all of them. Again, at 10:30, you can again, that's from UK again, medium report. Again, mortgage approvals, mortgage lending. Again, that's associated with the housing market because obviously mortgage approvals means, approving mortgage to buy houses. And if mortgage approvals have gone up, then that means there are more people buying houses. That means the housing market is doing well. That means the economy is doing well. So again, that's another one to note. It won't stop us trading, but another one to note at 10:30, the UK mortgage approvals and mortgage lending, again, relating to the housing market. Again, we can ignore reports of low importance. And then at 11 o'clock, the Euro area, since we're trading the Euro-US dollar, we've got these reports of medium importance, consumer confidence, final economic sentiment, industrial sentiment. Again, I wouldn't worry about these reports. But again, if you're new to trading, it's best you check what this report's about. You can Google them, find out about them, and then you can decide whether you want to be cautious trading prior to them or not. But these are the sort of things you need to read about and note and experience to then decide which reports of medium importance you would ignore and which ones you would be aware of. I personally, I would just ignore these ones. But anything, like I said earlier, anything to do with the housing market, I'll be cautious trading prior to them. Or check my trades prior to those reports. Okay, so again, I'll just ignore these reports of low importance. And you can ignore Spain. And then the big one for today, the first report of high importance is at 2 p.m. due out of Germany. And again, Germany being the major powerhouse in Europe, that could affect euro and hence the euro-US dollar. And that's a report of high importance, inflation rate. And as we know, inflation rate is one of the major reports, economic indicators for a country. So you want to be careful, ideally avoid trading the euro-US dollar prior to 2 p.m. when the Germany inflation rate report is due out. And Again, you can see another one out to the US at 3 o'clock. Again, to do with the housing market. Again, that's a report of medium importance, the house price index. So again, I'll note that at 3 p.m. At 3:45, we have the European Central Bank President Christine Lagarde speaking. Again, it's just a speech, not an announcement, so not to worry about that. And the last report of high importance today is at 4 p.m., which is the CB Consumer Confidence Report. Again, if you're new to this report, you can read more about them. Again, if you don't find them there, you can just copy, paste, and Google what the report is about. But of course, it's a report of high importance. That's the main thing. And it's due out of the United States, so that could affect all markets. So all markets could be affected by that report at 4 p.m. GMT +2. So you need to be careful or ideally avoid trading all markets prior to 4 p.m. But if you narrow it down to the specific markets we're trading, for the euro US dollar, for the US dollar specifically, because this inflation rate is of much more significance than the CB Consumer Confidence Report in relation to the Euro USD, I would start trading the Euro USD at 2 p.m. because of this significant report, which could affect the Euro US dollar. So specifically for the Euro US dollar, and because of this inflation rate report, which is more important than the last report from the US, I will start trading the Euro US dollar just before 2 p.m. or around 2 p.m. when that report is announced. If I lose out on my first attempt, trading the Euro US dollar, then I'll stop trading and have my second attempt around 4 p.m. GMT +2 when the last report comes out. So that's specifically for the Euro US dollar or any currency paired with the Euro. Now for other currency pairs, especially the other one we're trading, the USDCAD, obviously the USDCAD, this doesn't affect the USDCAD. So for the USDCAD, I would avoid trading the USDCAD until around 4 p.m. GMT +2. So the Euro US dollar, I will trade around 2 p.m., but the USDCAD, I'll wait till 4 p.m. GMT +2 before I trade that market. Okay, so again, it's good to check the rest of the week. So go to the next 7 days. Let's see what's coming out for the rest of the week. So tomorrow is Wednesday, the 30th of June. Let's see what's coming out, if there's anything significant. We have the UK GDP growth rate, so that's quite significant coming out tomorrow. And the Germany unemployment rate. So we've got a few significant reports coming out tomorrow, and also the Euro area inflation rate. Okay. And then 1st of July, Canada Day. Again, that won't stop us trading. So 1st of July, that's Thursday. But the big one is Friday, which is when I'm coming to. Friday is the big one. So on Friday, the 2nd of July, we have, as usual, the US unemployment report, which comes out on the first Friday of every month. So this Friday is the first Friday of July. This Friday is the first Friday of the month, the 2nd of July. And yes, the US unemployment report comes out on the first Friday of every month. So that's coming out, the US unemployment rate at 2:30 p.m. GMT +2, the non-farm payrolls. And that's a highly anticipated report that affects all markets, all financial markets, all global markets, all stock markets. All currency pairs are affected by that report. So again, this is one of the reasons why it's good to check the rest of the week, because of this highly anticipated report on Friday. There is a possibility, again, the words always and never does not exist in financial markets. The words always and never does not exist. What you base your decision on is what usually happens, okay? But what usually happens, or what there's a probability that the markets could trend sideways all week leading up to Friday. It's not, again, it doesn't mean that's what's going to happen, but because of the probability of that happening, of the markets trending sideways all week leading up to this report on Friday, then that will make me cautious trading, yesterday, Monday, today, Tuesday, tomorrow, Wednesday, and Thursday, and also on Friday leading up to this report. So because I know there's that probability of the markets just trending sideways, I'm going to be extremely cautious this week leading up to Friday. And instead of having the usual 3 attempts every day at the market, I'm just going to have 1 attempt each day leading up to Friday in view of this report coming out on Friday, the US unemployment rate and non-farm payroll report. I'll also set up a webinar, so we'll meet around that time on Friday and we'll trade this report together. Okay, so again, you can see why it's important to start your day off with the economic calendar, because that sort of plans your day and your week. It gives you an idea of what time you should be trading, when you should be trading, and how often you should be trading. So it sort of sets the tone for your trading. Also, don't forget to check Market Watch to see if there's any thing going on that could affect or cause uncertainty in the markets. The potential thing that could cause uncertainty in the market is obviously the US administration, the Joe Biden administration. They're beginning to, flex their muscles with China. So, and also Russia. But, nothing major has kicked off yet, but one should watch out for that because Joe Biden is now beginning to show what his administration or how they're going to deal with China and Russia during their administration. Nothing shocking has come out just yet, but it's good to keep an eye on that. But other than that, there's nothing really untoward going on, creating uncertainty in the global markets. Okay, and again, don't forget public holidays. There are no public holidays this week, but next week, I think we have obviously the US Independence Day next week, 4th of July. So let me just bring up that. So again, don't forget to check public holidays. So let's scroll down quickly to June, July. So we're currently on the 29th of June. So we can see that the next federal holiday in the US is the 4th of July, which is Independence Day. But because it falls on a Sunday, the Monday afterwards will be a holiday, federal holiday. So next week, Monday, will be a public holiday in the US. So you want to avoid trading next week, Monday. So again, don't forget to check for public holidays. But there are no public holidays this week or today specifically. Okay, so with that in mind, like I said, we're going to avoid trading the Euro-US dollar prior to the Germany inflation rate. Oh, sorry, let me go back to today. So we're going to avoid trading the Euro-US dollar prior till 2 p.m. Of course, now that I'm back, I will update my trades around that time. I'll reassess the market just before that report. So that's just for the Euro-US dollar, and for the dollar CAD, I'll wait till 4 p.m. But let's have a look at the market. So we'll start with the swing trade. We'll go to start with the Euro-US dollar. Go to the daily time frame, D1. Markets have been quite crazy over the last 2 weeks since I've been away. They waited for me to go on holiday before it started going crazy. So I got taken out of my buy swing trade, and you can see the market has fallen. It's currently down here. So I currently have no trades. So at the moment, I'll start my pending order now with the swing trade. So you can see, let me make it a bit bigger. So today, the moving average 50 today is 1.20985. So I'll round that up to 1.2099. And 2 pips above that will be 1.2101. So pending order will be 1.2101. And then stop loss of 100 pips, 1.20 or 2001. 100 pip stop loss. So that's my swing trade for Euro US dollar. And then I'll check again tomorrow. So go to the day trade today, 5-minute time frame. So you can see the market is currently trending sideways between R1 and S1. Again, I'm not going to place any pending orders now. I will reassess this market just before the report at 4 p.m. I don't know, 2 p.m., just before the report at 2 p.m. And I will then decide where to place my trade then just before 2 p.m. So that's for the Euro US dollar. Go to the dollar Canadian dollar. Again, we'll start with the daily time frame. Again, the market broke the moving average 100, took my pending buy order then, moved 100 pips, and moved my stop loss to the moving average, and then I got taken out. And we can now see the market just hovering along the moving average. So because of the way it's just hovering around the moving average, I'll just watch and wait for now regarding the swing trade with the dollar Canadian dollar. So for this day trade, go to the 5-minute time frame. Again, market is currently trending sideways. Again, I'm going to leave this market alone. I'll reassess just before the last report of high importance from the US at 4 p.m. and decide where to trade then. And I'll post my trade on the platform then. Okay, any questions? Oops, any questions?
Yes, I do have a question. I don't know if I because yesterday I placed my first trade, I think on around after 12 Sunday night. So it's still moving. Did you say that it was trending sideways within R1 and S1? Because I'm just looking at my IG platform, and yes, indeed, it is trending sideways, but the trend is between the pivot and S1. So the pivot, looking at my platform, the trend is between, or the sideways movement is between the pivot and S1. Did you say it was between? Yeah, I'm just interested.
It depends. Actually, this is actually a good thing. That's a good question. That's a good thing about trading. It depends on how cautious you want to be or how specific you want to be, and that would depend on the individual traders, how they want to look at it. So let's start from here, for example. So you can see here where the market just fell down and got to that low point there.
Mm-hmm. Yeah.
And let me make it a bit bigger. Oops, it's too much. Okay, anyway, we'll do it slowly. But if you want to be fussy, we can say, okay, it now went up there from the high, then a low, then a high, then a low, then a high. So here it was forming higher highs and higher lows. And then at that point, it formed a high and then went there, and this low was lower than that. So at this point, this uptrend stopped. Excuse me. Then it went up again from the high.
Mm-hmm. So
this was a recent low then. So this was initially began to trend up, forming higher highs and higher lows, and it stopped from the low there. So at this point here, that was the most recent high, that was the most recent low. Then it formed a new high, then a low, then a high, then a low, then another higher high, higher low. But again, this high wasn't higher than that, so you can say stopped trending high there, then formed a low point there. And then at that point, we can see it's just going sideways. Let me just put rough lines there. Oops. Okay, so at that point, you can say, okay, it's now broken the sideways trend here. Now it's forming a low, a high, and then you can now, so if you want to be very specific, you can now say the new sideways trend is, you can now say the new sideways trend is here. Now this is if you want to be very finicky. Now this is where you need to take everything into consideration. So like I said, I'm just starting to trade now. I actually just got back last night. So this is my first morning being sane and recovered.
Mm-hmm.
So I'm just starting afresh. So what I'm trying to say by that is that, and again, judging from the fact that the non-farm payroll report is coming out on Friday. So my first look at this is that, so that's why this is where you have to choose between the two things I've just done. You can either be that finicky, or I can just say, look, the market, all this is a sideways trend. You know what I mean?
Yeah, okay, I got you.
I
Yeah.
can just say, look, I don't like the way this market is going. We've got a report of high importance coming out on Friday. There's a chance the market could just be trending sideways up to Friday. I just want to be cautious, make sure I keep out of any potential sideways trend and just take all this as a sideways trend.
Okay.
So that's just me being very cautious in view of what's coming out. But if I already had a live trade like you do, I could. So yeah, this is where there's no hard and fast rule when it comes to trading.
Okay.
It's really just taking all the factors into consideration and deciding what would be the best line of action, you know, given your live trade, given what's happening today, given what's happening for the rest of the week, what are the probabilities of what's going on, then you take all that into consideration and then decide whether to, you know, take a bit of risk and be finicky with this sideways trend, or be more cautious and look at the overall picture of the market.
Okay, that makes sense. Okay. Yeah. Then my second thing, I had something very interesting happen to me before I started trading on around after 12 on Sunday. The opportunity was there, so I placed both a buy and a sell order. And immediately I placed both orders. Both of them were the entry points. Both of them were green. So I was like, that's interesting. That's never happened to me before. And I was just wondering, were they both green? Because in my mind, I'm thinking, what happened there is that was the market at an entry point that was kind of average to both buying and sell. I mean, eventually went on and took my sell, and I deleted my buy. But I don't know if you've ever come across that before.
Yes, you're right. What you say is correct. So yes, like you correctly said, if the market is close to your order, it starts to show green. So if it was close to both your buy and sell, then yeah, both of them might be flashing green. But like you rightly said, the fact it was flashing green, it didn't mean the market took it. It just meant the market is not too far from those 2 points.
Wow, okay.
Yeah. But yeah, like you correctly said, it's because they're within a certain range from the market, and so they're flashing. But as you can see, when one was taken, the other one was still pending, and you were able to delete it.
Yeah, okay.
I've just tidied up those white lines. I'm going to leave them now. Now that I've spoken about that, I'm going to leave them. That's what I'm going to use to keep out of any sideways trend. But yeah, like I said, if you already have a live trade, you can use this tiny bit here as a sideways trend.
No, I'm thinking of closing my live trade. It's been running since, you know, and since at one point I think I potentially could have hit the halfway trend, but I was sleeping, so I missed it. And since then, in fact, I'm lucky that it is where it is, because it's just been trending sideways. I'm thinking, you know, well, let me just close it, and yeah.
I'll leave you to decide. I'll leave you to decide on that.
You know, half bread is better than none.
True that. Very true.
Half bread is better than none. Yeah, no, those were just the 2 questions from me.
Okay, awesome. Okay, so it's good to be back and good to have your laptop back. So we'll catch up on the platform.
Indeed. Yes, indeed.
All right, then. Happy trading and have a good week.
And you too. Thank you very much.
All right,
Bye-bye.
take care.